I have gold trading in its own basket right now, where gold is trading myopically and there's somebody buying it for reasons that maybe the whole world doesn't understand. But, we obviously have a lot of evidence of central bank buyers, right? And maybe the world is looking around right now at, the towering deficit in the dollar and saying, this is getting a little sketchy for me. We probably need some diversification here. If we're not going to be in dollars, maybe we should have a bigger gold position. And maybe that's a regime change that's going on right now. And maybe central banks are saying, okay, if the dollar debt is exploding and maybe the dollar gets weaker, maybe we have too many dollar reserves, maybe we should all have some more gold on our books as well.
To say the most recent jump in gold prices is surprising will be an understatement. Never known for its volatility, gold took even the biggest gold bugs by surprise when it blasted past all-time highs on Sunday night. Despite the many predictions of huge moves in gold prices, hardly anyone expected it to happen on a Sunday night with almost no prior warnings. According to data from FX Street, gold price hit a new all-time high near $2,150 at the weekly opening as markets reacted to geopolitical tensions in the Middle East. While the Israel-Hamas war and expectations of the war extending to include Iran, the United States, and even Egypt might be fueling a part of this rally, experts believe there is much more to this. In the past 24 hours, hundreds of precious metals analysts, bullion dealers, and popular investors have taken to their social media accounts to speculate about the reason for the sudden jump in gold prices and what it means going forward. According to Tony Greer, the editor of the Morning Navigator, there are several reasons fueling this rally. During a recent interview with Liberty and Finance, Tony speculates that the recent jump in gold prices can be attributed to central bank accumulation, which is still happening at an unprecedented pace, and fears about the economic situation in the United States. Tony believes this could be the beginning of a massive rally that will cause further big jumps in the price of gold and silver. We will now bring you clips from the interview. Please watch, share, and like this video, subscribe to the channel, and turn on post notifications for more. Thank you, and enjoy the video.
Interesting to notice, right? If you take a step back from that chart, you can really see a very clear cup and handle, right? And then if you zero into that chart, there's even more, call it technical merit, I think, where you can see that if we break through this triple top, right, there's three highs in the last, I guess, 4 years or so that are, between 2070, 2060, like that. And through there, we're at all-time highs, right? Through there, you're going to see CTA buying. You're going to see clear follow-through in the price point. It's definitely going to accelerate. And, everybody in the gold market is kind of excited to get it through there. And what's really interesting right now is that there's not a really clear narrative behind the rally, right? It's taken off very clearly since October 7th, since the Hamas attack in Israel. And it has been on a beeline higher since then. Not to say that that is necessarily what caused it, because markets do what markets are going to do. But there's been a very clean, gold suddenly is stomping around the trading floor, as we like to say. To me, it's interesting because open interest is still sort of kind of bottom feeding along historic lows, like 450,000, 500,000 contracts on the COMEX. So that's cool because there's no big net speculative position in it. The total gold ETF holdings are well off the highs as well, from 120 million ounces where they were, I think, back in 2019. That's backed off to about 85 or so million ounces. And so, there's more room for buying in the ETF. In fact, you can see it's clear that a lot of length has come out by the size of the holdings going down. So it's interesting that gold has kind of made this kind of surprise attack that's shaken everybody up and said, whoa, well, what's going on here? Real rates are still kind of much lower. Why is gold holding up? And, the reason is because markets do what markets are going to do. And to me, it's, a little bit of possibly a geopolitical flight to safety premium that it's building in now. I know that there's not bombs flying around the world or anything like that, but it sure does seem like the world's a little bit more of a dangerous place than it was 5 years ago. So there's that premium of, what's going to happen next possibly. And I think it just goes along with sort of where money is happy. There's not a big trade in the oil market. The base metals markets are kind of quiet to sideways. They've just woken up recently with the last set of Fed commentary, last FOMC meeting, but there's really been no trend higher in any base metal at all. I think that's fair to say. So gold is, the one commodity that's got, a pretty solid story behind it. And just in that, in this world of, where there's a lot of money printing going on, massive deficits, you would think that gold would have a place in sensible portfolios. And so I think there's a lot of that's kind of coming out in the wash right now. So I think that's kind of why gold has gotten back on its horse. I think it's an attractive asset. For me, it's kind of monetary insurance. I do have a long position at the moment, but trading position. But, I also have physical gold that for me, I don't really worry about the price fluctuation of gold in terms of that physical gold that I have. That's just kind of a value that I'm hoping is somewhere around, a valuable price if I need to sell it. So the gold story, I think, is pretty good. I think, the same thing with silver, although I'm not much of a silver bug. The market looks pretty good. Technically, it looks good. There's some good underpinnings in the physical side. So the precious metals markets are just kind of a bright spot in the commodity space, if that's fair to say right now.
While gold has been known to lead rallies in precious metals, silver is always the metal to pay attention to during such times of extreme upside volatility. If gold is suddenly gaining 2% on a Sunday night, one can only imagine what silver prices will do when it decides to enter into the mix. Silver is already trading at multi-month highs and its highest price for 2023, with the exception of the banking crisis in May. During the interview, Tony explained some important things to note about the ongoing rally, especially what's happening in the gold exchanges and ETFs. According to the analyst, we've seen a drastic drop in sentiments among precious metals investors over the past few years. Yet here we are with gold jumping so suddenly on a Sunday night. Let's get back to the interview.
That we're discussing that, open interest is low. Total ETF assets are off the highs, and, which is good because it's not a bloated position. What's interesting, what's cool is that, back in 2020, and then even before that, even actually the last time gold was up here at this price, which was, I guess the last rally was around 2011 when we got near 2000. What was wild was back then, like gold coins were trading in the street on Wall Street between people that worked at banks and people that were brokers and things like that. Like that trade was hot and in vogue. Like I was trading gold coins. I was trying to collect some more, to expand my collection. And, obviously didn't see the face plant coming. But what's cool is this time up at 2000, gold market's pretty quiet. It doesn't look like Bitcoin at 70K with all the laser eyes saying, have fun staying poor. There was just nobody at the gold conferences. There was just, some photographs of a recent metals conference that took place in the last couple of months, but there was nobody there, and it's kind of one of those markets that you can easily say has sort of been left for dead in terms of, sector performance and fund flows and things like that. It's just not super popular and not super trendy. And so what better time for gold to make a new all-time high? And, when I look at the chart in the short term, you got those three peaks that are just under 2,100. You get through there, there's going to be, number one, any CTA that's short for whatever reason, maybe they're going to short it up against that high and think there's going to be a quadruple top, which is possible. But anybody that's short's going to have to cover through that. It may, and the trade that is going to want to add to their position is obviously going to buy, as much as they can afford to buy, and just to see what's up there and just to see how far it will go. If you're carrying a long position and you get through 2,100, I would look to double it, because that's been a major Mason-Dixon line technically. So you would think that if we get through there, that there's both really good follow through and, that's going to be mega support going forward, is that you wouldn't expect gold to give up the 2K handle, for a long time to come after we just battled to keep it below there for such a long time. So there's a lot of really interesting psychological factors involved with gold this time around, which is really cool about the rally. And as a trader, it kind of gives you the fact that it just caught everybody by surprise, the fact that real rates are much higher now, and so gold should probably be lower. The fact that there's really no global destabilization and all of things are going on while gold is sitting right here at the highs, kind of ready to go, as we say in trade. So, I would say that there's probably going to be a several $100 follow through on the other side of that. And I'm hopefully going to be right in the middle of it. I have gold trading in its own basket right now, where gold is trading myopically, and there's somebody buying it for reasons that maybe the whole world doesn't understand. But, we obviously have a lot of evidence of central bank buyers, right? And maybe the world is looking around right now at, the towering deficit in the dollar and saying, this is getting a little sketchy for me. We probably need some diversification here. If we're not going to be in dollars, maybe we should have a bigger gold position. And maybe that's a regime change that's going on right now. And maybe central banks are saying, okay, if the dollar debt is exploding and maybe the dollar gets weaker, maybe we have too many dollar reserves, maybe we should all have some more gold on our books as well. And maybe that's one of the dynamics where we're taking net more gold off of the producers than they're willing to sell right now. So if we get through that technical level, then things get sort of symphonic and you get CTAs involved and the price starts moving fast, and it becomes a really exciting market again. But it seems like we're too close to the precipice of that to turn around and walk away and go back to $1,800 gold again. Even though the stock market, is doing better, the bond market, rates have peaked and maybe are heading lower. It would be sort of strange to see the stock market, the bond market, and the gold market all rallying at the same time, wouldn't it? But we're in kind of the strangest times I've ever seen, so I'm trying not to let that get to me.
According to reports, Yemen's Houthi rebels hit 3 commercial ships in the Red Sea on Sunday, and a U.S. warship responded by shooting down 3 drones. In a statement released after the event, the U.S. military's Central Command said that they have every reason to believe that these attacks, while launched by the Houthis in Yemen, are fully enabled by Iran. Meanwhile, Yemen's Houthi movement acknowledged that they had targeted 2 Israeli ships in this attack, saying that they were responding to calls from Islamic nations to stand with the Palestinian people. These reports have increased speculation that we are heading for a massive escalation of the tensions in the Middle East. If that happens, it could spur further rush into safe haven assets like gold and silver. Please share your thoughts about the latest gold and silver price rallies. Do you think this is a result of central bank accumulation, flight towards safe haven amid increasing geopolitical tensions in the Middle East, or something much bigger? Please drop your comments and observations in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos. Thanks for watching.